This correction in gold and silver has shaken out weak hands. Investors who bought near the top, who did not understand the fundamentals, who panicked at the first sign of price decline, they have already sold. The speculative froth that pushed silver to $121 in January has been cleared. What remains is the structural demand. The central banks still buying gold, the industrial consumers still consuming silver, the supply deficits still compounding. Those forces did not sell their positions. Those forces are not going anywhere. And that, right there, is exactly what a market looks like before the next major move begins. The gold to silver ratio, sitting at 61.7 to 1 in June 2026, is not a sign of trouble for silver. It is a sign that silver still has significant repricing ahead of it relative to gold. If gold reaches $6,000 and the ratio compresses to just 50 to 1, not even close to the 31 to 1 we saw in 2011, silver would need to trade at $120. That is nearly double where it sits today. If the ratio reaches 40 to 1, still far above the 2011 peak, silver at $6,000 gold would be $150. These are not wild predictions. These are simple arithmetic based on historical compression patterns and current institutional targets. And here is the insight that ties all of this together. We're living through a fundamental restructuring of the global monetary system. Central banks are buying gold at rates not seen since the Bretton Woods era. De-dollarization is not a conspiracy theory, it is a measurable, documented trend that every major financial institution acknowledges. Fiscal deficits are expanding globally, not contracting. Inflation, even at its current level of 4.2%, remains well above the historical average for the post-2008 era. And silver, sitting at the intersection of monetary demand and industrial necessity, is arguably the single most asymmetrically positioned asset on the planet right now. Most people watching this video will do nothing with this information. They will wait. They will watch the price go sideways. They will want more confirmation. And by the time the confirmation they are waiting for arrives, the move will already be well underway. History does not give second chances on setups like this. In 2020, when the gold to silver ratio hit 125 to 1, the window to act was brief. Silver went from under $12 to over $29 in just 4 months. The investors who recognized the signal acted. The ones who waited for more confirmation bought the top. The same dynamic has played out in 1980, in 2011, in 2020. And if the current analysis from every major institution on the planet is correct, it is playing out again right now. Gold has confirmed what silver investors wanted to see. The macro is intact. The institutions are still buying. The fundamentals are still compounding. The ratio still has room to compress. And the price, sitting at a 42% discount from its all-time high, is offering the kind of entry that does not show up very often in any market. This is the bigger picture that most investors are completely missing. And the ones who understand it, the ones who see what the ratio is telling them, who understand what 6 consecutive supply deficits mean, who recognize that central bank gold buying of this magnitude has never happened without a major sustained move in precious metals, those are the investors who tend to look back at moments like this and say, that was the moment everything changed. Now you have seen the picture that most people will not see until it is too late. If you have found this analysis valuable, I want to ask you one question. What is your biggest concern about the precious metals market right now? Is it timing? Is it inflation? Is it Fed policy? Leave your honest answer in the comments below. This channel exists to have a real conversation about the forces shaping your financial future, and your perspective matters. If this video gave you something to think about, please share it with someone you know who is trying to understand what is happening in gold and silver right now. One share from you could make a real difference to someone trying to navigate this market. And if you are not already subscribed to Gold and Silver Intelligence, do it right now, because the next video in this series is going to take the picture we have built today and show you exactly how the industrial demand story for silver connects to the AI infrastructure build-out happening right now, and why that single factor may be the most underappreciated driver in the entire precious metals market. You do not want to miss that one. Like this video, subscribe to the channel, share it with someone who needs to hear this. The information is out there. Most people just are not connecting the dots. That is what we do here. We will see you in the next one.